Is the housing market hanging by a thread? Well, 79% of first-time FHA borrowers have less than a month of financial reserves. Does that sound familiar? Well, it should, because this is a major red flag that reminds us back of 2008. But here's the catch. The Fed will not let it crash the same way. So what's next? Let's break it all down. Hey everyone, I'm Jairo Rodriguez, a real estate expert, keeping you up to date with everything happening in the housing market, especially here in New Jersey. So if you want to stay ahead of the trends and make smart real estate moves, be sure to hit the subscribe button and turn on the notifications so that you make sure that you do not miss one of my real estate trends, news, changes, or any type of tips that I provide out there. So let's dive right in. The American housing market is facing a serious financial risk. And according to recent reports by the American Enterprise Institute, 79% of first-time FHA borrowers have a month or less in financial reserves. Now, this means that if expenses increase due to inflation, unexpected emergencies, or job loss, then they won't have enough savings to cover their mortgage payments. And that's a huge deal because FHA loans are designed for lower income first-time buyers. People who typically don't have a large financial cushion. And right now, many of these homeowners are just one financial shock away from default. Now let's compare this to 2008. Back then, risky lending practices and a wave of foreclosures led to what we knew or know now as the full-blown market crash or housing crash, if you will. But today, we're not seeing similar results. Borrowers have low reserves, there have been rising costs, and there's economic instability or uncertainty, right? And there's one big difference now. The feds won't let the market crash because the economy is already in a fragile state, and a housing collapse would make things even worse. Instead of allowing a crash, the government will likely step in. They'll step in by either cutting rates, they'll do bailouts, or maybe new policies to ensure that we keep things afloat. Now that means that we could see extended inflation, higher home prices, or even more challenges for first-time buyers that are trying to enter the market. So what does this mean for you? If you're a homeowner, it's crucial that you build up reserves and prepare for an economic shift. We're seeing it already. Eggs prices, gas prices, right? All of that stuff is going up. But if you're a buyer, be mindful of your financial position and don't stretch beyond your means. And if you're an investor, well, stay informed because opportunities may still arise, but risks are high. Guys, the housing market is changing fast, and staying ahead of the trends is more important now than ever. Do you think we're heading for another crisis? Or will the Fed help in and keep things under control? Drop your thoughts in the comments below. And if you found this update helpful, don't forget to like, subscribe, and hit the notification bell before so that you never miss a market update. See you guys in the next one. And as always, thank you for watching.